ladies and gentlemen. You're watching India Tonight with me, Sumita, Kareer, and my colleague Shibani, Gharat. She's joining us from our Bombay studios. Shibani, this Friday evening, we're going to be putting the spotlight on India's consumption story. The country is witnessing a structural upgrade in consumption. For the first time, households are spending less on bare necessities and more on asset-building items like vehicles, appliances, and mobiles. And this is not just inflation-adjusted growth, it's a genuine shift towards a higher standard of living. The fastest growing durable, while motor vehicles, two-wheelers and four-wheelers are growing faster than any other durable category in both rural and urban India. And this is the clearest sign yet that aspirational India is now on wheels, literally. The death of television, the rise of the smartphone, TVs are being replaced by mobile phones as the primary source of information and entertainment, even in villages, Shibani.
Of course, Sumita, the bottom 40% are catching up fast. The gap in ownership of productive assets between the poorest 40%, middle 40% and top 20% is shrinking rapidly. This is one of the strongest pieces of evidence of inclusive growth in the last decade. Now, rural-urban India is converging at speed. The old divide is blurring. Rural households now own almost as many durables as urban ones did a few years ago. Now, better roads, better electricity, digital connectivity and financial inclusion are making this possible. This is real middle class moment when people are moving from spending on food and clothing to buying vehicles, appliances and smartphones. It's not just consumption growth, it is the birth of a productive, aspirational middle class that will drive India's economy for the next 20 to 30 years. To discuss all of this and more, we are joined in by Lalit Bhise, who's the CEO and founder of Bizom, Mrigank GutGutia, who's a partner, Redseer, and Siddhartha Sanyal, Chief Economist and Head of Research, Bandhan Bank. All of you, welcome to ET Now.
Hi, Shibani. Lovely to be here.
So there is a narrowing gap between the urban and rural spending over the past decades. Of course, automobiles, consumables, urban-rural inequality is in fact quite reducing. So first, let's capture both of your reactions, on this, and what does it say about the story of the growing middle class as well?
Right. So if I may, Shibani, to start, so in Bizom, for almost a year, we have been observing what we call it as a rural growth. Rural has been a driving growth engine. But what was more interesting, and we track it from an FMCG or the retail footprint point of view, what we have seen is what we call it as the rise of standalone modern trade. The modern trade itself has been growing phenomenally in what we traditionally call as rural, but obviously the definition of rural itself is evolving with even the suburban or slightly away from urban is partially considered rural. So, for example, in the case of Bangalore, Tumkur is growing faster than Bangalore was one of the insights that we had shared, both in terms of number of standalone modern trade stores, also in terms of the actual value consumption. Similarly, other thing that we have noticed in the whole Kirana ecosystem is premiumization. If you look at the growth of premium products in rural, it is almost as much as it is in urban. Albeit the pack sizes that typically sell in rural are smaller pack sizes compared to urban. So from that point of view, what you are saying is absolutely correct. Rural is catching up with urban, both in terms of the kind of Kirana or the kind of shops they're shopping in and the kind of products that they're shopping in, especially when I talk about consumer goods.
Right, Mr. Bhise, you've put across very important points, those points related to premiumization and, of course, how this is reflective of the India consumption story going through a bump up. But let me come to you, Mr. Sanyal. Mr. Sanyal, the points that Mr. Bhise has essentially spoken about and what this PM Economic Advisory Council report essentially mentions, does this mean this convergence essentially mean that wage gap between rural and urban is narrowing too? Because that has remained the biggest concern as far as the India growth story is concerned, that wage gap has only expanded and it hasn't really narrowed. So what does the report essentially tell you, the outcome of this report tell you about the wage gap?
Thanks for having me here on this particular show. Indeed, I think some of these findings that you're highlighting is not necessarily very surprising, but they are nevertheless very heartening. So very clearly what we are seeing that what earlier used to be thought as some kind of very basic or staple consumption on the part of rural, very clearly there is an uptick that we are witnessing. Very clearly it's not necessarily consumption, but a little bit of investment in asset building that the rural economy is also focusing. And what is very encouraging is that actually leads to future income generation as well as future consumption. Now, it's not only necessarily physical infrastructure, possibly the investment and spending by the rural population in human capital infrastructure is also increasing at a pretty decent pace at this moment. So overall, pretty heartening.
Yes, we have Mrigank also joining in. So, Mrigank, my question to you is that the report also indicates that there is a substitution of, TV screens with smartphones, and, people are investing in mobiles, and that too, the branded and the mid segment ones. How is that shift in media consumption, affecting marketing strategies and ad spending of consumer durable brands, especially, the washing machines and also many other brands making refrigerators and all to reach out to more in the rural markets?
Yeah, thanks for having me here. I think it truly is a fundamental shift. In fact, I think one of the most transformative shifts that we have seen in the last 5, 6 years is the increasing access to the mobile devices. And, essentially customers have leapfrogged the traditional television-based content consumption into a, mobile or a small format consumption. Now, what does it mean, right? It has multiple spillover effects from a consumer consumption lens. You mentioned about durables, but I would take a wider lens, right? So what is happening is that now the rural customer, or a Bharat customer, as we call it in our research, I think they have access to all the content that is practically almost similar to the content accessible to the urban counterparts. And they have access to the similar trends or similar knowledge and information. Now that is completely feeding into their consumption themes, right? So for example, they are very much aware that they need to have more protein in their diet, right? So as part of our consumer research, we found out even Bharat consumers, to the extent that their budget allows, they are substituting some items with, let's say, the more eggs or paneer or more protein-filled items. That's one example, right? So the awareness is getting generated through the devices, and that is translating into consumption shifts. The second example is at a home, right? So there is a clear awareness that the home has to be upgraded to the extent the budget allows, but it has to be better lived, and the durables, better quality durables, let's say washing machines, refrigerators, and so on. So a very sharp awareness building is creeping up across these consumers. And from a brand's point of view, whether it's a durables brand or something else, they need to be mindful of the fact, where are these consumers spending their eyeballs? So while of course they're browsing a lot of time online, but they might be spending some time on an Instagram, or maybe spending some time on a Meesho, or some of these new age marketplaces. So the advertising dollars and the digital spends have to be in tune with that, and it highly varies region by region, location by location. It's a fairly complex decision making now that the brands have to do, now that so many of their consumers are in rural India are shifting online to mobile devices.
Absolutely. So, Mrigank, essentially what you're suggesting is that it is the more led digital boom that is really driving some of this consumption. But let me come to you, Mr. Sanyal. The points that I've essentially spoken about just a short while back in terms of, what are rural consumers buying? It's related to autos. There are other consumables as well, whether it's related to more mobile phones or other such things. But would you call this a deep structural transformation in household spending, or are we overlooking the possibility of perhaps a credit-fueled demand bubble, and are we essentially overlooking the debt burden?
No, I'll not really worry about that. Rather, I would see as a positive structural change. When we are talking about last about 10 years or a little bit plus minus, I think at least three areas where there had been significant developments. One is better road connectivity between rural and semi-urban areas to the nearby towns and cities. Number two is much better rural electrification drive, which is also really got a much faster momentum over this particular period. And there is another element of data and reach of data and smartphone. So basically what is happening is better road connectivity, better electricity driven devices, as well as better data related connectivity. All these things are actually bringing rural and hinterlands closer to the near, closer to the cities. And that's why it's not really a surprise that some of the consumption patterns are converging a little more than what was the case a few years back.
Mr. Bhise, you had previously mentioned how, the GST rate cuts can influence consumer behavior. So how do you think, policy changes such as GST rationalizations have affected the price sensitivity of the rural consumer to make them move from, upgrading from basic commodities to more premium and branded products?
Right. So GST obviously for this year was one of the biggest, so to say, events which drove consumption. Now put things into perspective. Even when the GST rates reduced the pricing of the products in October itself, we overall saw net growth in the consumption. And again, rural grew faster than urban in general, almost more than 8% just month on compared to last year, in spite of the prices being low. And I'm talking about value-led growth, which means the actual growth was much higher than 8%, probably in the range of 15 to 16%, if I would have taken it at a similar price points, right? So the growth, GST did play part in the particular growth, but I think the whole premiumization was a trend that had already started. The categories, for example, were very interesting, are like dairy or value-added dairy products like ghee or paneer are the categories where we saw one of the maximum growth happening when we looked at the data year on year. And again, like you are saying, I mean, it is about aspirational, it is about premiumization, it's about buying more value product with the money that you save using GST. So, whether it is a better ghee, better paneer, more expensive ghee, more expensive paneer, organic, natural ingredients, protein-infused food. We clearly see a trend towards that when we look at something like food. Even with confectionery, more healthy snacks, healthier snacks. These are the kind of shifts that we have been observing, and they are just accelerated with this whole GST reduction in the month of October.
Absolutely. Absolutely, Mr. Bhise. Let me come to you, Mr. Sanyal. In fact, the premiumization point that Mr. Bhise has spoken about is a strong point of this discussion. And of course, we've been seeing how the premiumization story is unfolding over the past couple of years. In fact, we were talking about premiumization being limited to urban centers, but it does seem that it has percolated down to rural areas as well. But is this sustainable? What are some of the risks that you see to this kind of, consumption boost that we are seeing? Of course, it's been aided by government's policies, whether it's related to the GST rate rationalization or the welfare schemes that we have seen. Are there any risks that you foresee?
Come to the risks, but before that, I'd rather say that once more, I'd like to say that this is not necessarily a sporadic and a sudden development. Rather, there are some deep-rooted elements gradually taking things in that particular direction in a very measured, but in a very, very certain way. For example, the better road connectivity is actually encouraging the rural consumer in terms of transportation, etc., to think about a better vehicle, better two-wheeler, etc., or even visiting the near city areas a little more frequently for business, for entertainment, for other purposes, everything, which is actually bringing the consumption habits a little closer to each other. Even the data connectivity is allowing actually the e-commerce delivery centers to reach the rural customers also equally efficiently, which was not so easy earlier. So earlier, a rural customer possibly would have to make a long plan, long journey, invest a lot of time, energy, and money to actually reach to the store in the city areas for that particular premium segment, which now he or she can actually get sitting at home. So these things are making a very clear structural pattern, which is actually leading to this and which will sustain. If you are asking me about the risks, I think for this particular segment, one particular risk is the weather-related aberrations, which are becoming a little more pronounced. And given that the rural income spectrum is slightly more linked to the weather-related aberrations or exposed to the weather-related risks, that remains a risk. We need to tackle that over the course of the next 10 years. But otherwise, there are enough and more reasons to believe that this is more structural than just something wins very sporadic. And that's why you actually expect this particular trend to sustain and possibly get strengthened even further.
Over to you, Mrigank. We know that, the gap is narrowing. Of course, the rural consumer is making more aspirational purchases. Mr. Bhise had touched upon it for like a brief second, but I want to check with you, how are some of the FMCG consumers or FMCG, your FMCG network is adapting when it comes to their pack sizes in some of these markets to align with the rising aspirational purchases, in rural India or Bharat?
Well, it's a great question, and as part of our work, one of the things that we work very closely with is, let's say, new age brands, right? What we call as the D2C brands. So just to cite a particular example, I think when we were doing a significant amount of consumer research in the Bharat or the tier 2 rural cohorts, one of the things that really stood out for us was that there is an extremely large amount of awareness regarding the new age brands, let's say in the BPC, in the beauty personal care space. And what we have seen the brands respond with is that they have introduced some of these very smaller packs for their typical new age products that would be popular in the bigger cities, smaller packs for that. And that is driving a significant uptake in awareness as well as consumption in the smaller cities. And again, when we probe deeper into this theme, we figured that, let's say, a lot of these behaviors are driven by let's say, the daughter in the house or even the mother in the house who has significant awareness about social media trends and these products. And then we see that the new age brands are responding to that with smaller packs or specific products. So that's one example, right? At the same time, there are specific platforms which are now creating products which are very value first or customized to the rural audience or the semi-urban audience. These could be, let's say, launched unbranded or semi-branded products launched on a Meesho or a Purple, those kind of brands, right? So and again, they are innovating on both the product size, the product packaging, as well as the ingredients that are there. So increasingly, we see that the brands are very much aware of the opportunity that is at hand with the rural customers, and that these customers have a unique need in terms of pack size, product, and everything, and they are innovating around it. And it makes sense, right? As per our data, we see that the Bharat or the rural consumption in products and services will be more than a $1 trillion opportunity by the end of the decade. So considering the size of the opportunity, I think it's really high time that the brands start responding to this in a very big way, creating out the customized products for this large cohort.
Mrigank, Lalit, and of course, Mr. Sanyal, for taking the time out and speaking to us here on this crucial story on urban versus rural consumption and whether that gap has essentially closed or this is just a short-term phenomena. But of course, from all the views that we have gotten from all you right here joining us on the show, this is not a short-term blip. This is going to be a long-term phenomena. But how do brands make the most of it? How do companies make the most of it in terms of changing their business models for their companies? That remains to be seen. But for the moment, thank you very much for taking the time out and speaking to us.
Absolutely, Sumita. And also, India's growth engines are revving up. And how? GDP growth for the second quarter has come in at a six-quarter high of 8.2%, surpassing all economists' projections. Now, the latest GDP numbers are far higher than the 5.6% growth which was registered in the same quarter last year. Meanwhile, GVA came in within a strong 8.1% versus a 5.8% a year ago. Manufacturing stood out as the biggest contributor to the strong uptick in GDP numbers, growing at a stunning rate of 9:1% compared to 2.2% in the same quarter last year. Now, India has now firmly cemented position as the world's fastest growth major economy, pushing past the concerns over the impact of US tariffs on our economy. Now let's listen in to what CEA Ananta Nageshwaran said on GDP numbers.
Now, how is the momentum in the economic activity looking now that we have 2 quarters under our belt, and as MOSPI's data show, the first half of the financial year have recorded a real GDP growth of 8%. So now we can state comfortably that the full year growth will be either 7% or to the north of 7% rather than to the south of 7%. There is basically, we are saying the growth rates will be at least 7% in real terms for the full financial year 25-26. In terms of investment spending, as Dr. Gharat pointed out, the Indian government's capex grew 30.7%, and the overall investment rate more than 30% in the economy. GFCF, the gross fixed capital formation, if you look at the expenditure-wise data, that is also showing a healthy number north of 30%. IIP capital goods 5.3%. Similar, more or less in the same ballpark as last year's numbers. Capital goods imports, healthy rate of 5%, and sales of listed private non-financial companies recovered and to an 8% growth rate in second quarter in the fiscal year compared to 5.5% in the first quarter, and also compared to 5.4% last year.
Now my colleague Prakash Priyadarshi joins in with more data on GDP.
Well, the second quarter GDP growth rate of 8.2% is a testament to the resilience of the Indian economy amid complex geopolitical situation and tariff-related disruptions. In fact, that also reflects, strong fundamentals of the Indian economy. With this performance, India was fastest major growing economy. A very significant development. After this stellar performance, the finance minister has pointed out that the growth has been driven by sustained fiscal consolidation, targeted public investment, and various reforms that have strengthened productivity and improved ease of doing business. It is important to note that the real GDP has registered 8% growth rate in first half of the current financial year. Along with that, post-GDP press conference, the chief economic advisor has clearly mentioned that the long-term trends reflects a steady and resilient domestic growth. Supply-side investment has started giving in. In fact, agriculture activity remains robust, and disruption in merchandise exports being counterbalanced by significant growth in services exports. Along with that, the most significant part is that the change in government stance as far as real GDP growth estimates are concerned for the financial year 2026, where CA has clearly mentioned that with this performance, now we have confidence that we can achieve at least 7% or higher GDP growth in FY26.
Absolutely, Prakash. Thank you for putting that story into perspective with all that data. Definitely, the Indian economy is steering ahead amidst geopolitical turmoil. In fact, the expectation was lesser than this, but the economy, the numbers of the GDP of how the Indian economy has performed in the past quarter have beaten all expectations. But since we're talking about the Indian economy, well, also let's take a look at the story on fiscal deficit, because fiscal deficit for the first 7 months of the current fiscal year that widened to 52.6% of the full year. In fact, the deficit for the same period last year, that stood about 46.5%. That was the number at which the fiscal deficit stood at last year. So in absolute terms, fiscal deficit for the April to October months stood at over 8.25 lakh crores. For the full year, the centre has pegged the deficit at 4.4% of 15.69 lakh crores. So that's the story as far as fiscal deficit data is concerned. Those are some of the numbers as far as total expenditure is concerned, capital expenditure is concerned. In fact, the fiscal deficit, in fact, has widened to 52.6% of the full year target. It remains to be seen how the Indian government is going to maintain fiscal prudence, given the fact that fiscal deficit has widened. All right, time now for us to slip into a very short commercial break. But ladies and gentlemen, lots more coming up on the other side. We'll give you a full picture of what's coming up as far as Black Friday sales are concerned. How has consumption been? All that and more is coming up right after this short break.